Hey guys, welcome back to Wealth Creation Ideas. This is Mo. And today, before we get started, I have a question for you. Who likes to pay taxes? And the answer is always nobody. And today, we are going to explore some ways of investing in index ETFs that can help you defer your tax bill. But before we move forward, I request you to like, subscribe, and comment on the channel so that we continue to produce videos like this in future. One of the ways to get equity exposure in US market is by investing in S&P 500 index fund that represents largest of the 500 US corporations and is considered a gauge for the overall US stock market returns. If you are a Canadian, there are multiple ways you can invest in an S&P index ETF like BMO's ZSP, Vanguard's VFV, or iShares XUS. I consider the first three as one type of ETF investing where all of these ETFs hold the underlying stocks which have a comparable weight to S&P 500. On the other hand, Horizon's S&P 500 index fund HSS works a little bit differently. Instead of holding the underlying stocks, this ETF uses swap contracts to get the same returns as S&P 500 index ETF. Both these group of ETFs have their own pros and cons. In this video, we're going to explore, do a comparison, and identify which one of these ETFs is right for you. For the purpose of simplicity, I have categorized ZSP, VFV, XUS in one category because all these three ETFs tend to operate very similarly. And I have done a comparison with XS, which operates and tries to get the S&P returns in a very different way. So let's try to understand how these ETFs work. If we take the example of ZSP, when you buy $100 worth of this ETF, what the ETF is doing in the back end, they are buying the actual shares of the company in the same weighting as S&P. So for example, let's say S&P has two stocks only. One has a 70% weighting, other has a 30% weighting. And if you invest $100 in ZSP is going to go and buy $70 of stock A and $30 of stock B. So that as the S&P goes up or down, the return on the ETF is exactly the same. HSXS, on the other hand, operates very differently. They don't buy any underlying shares. All they are doing is that they are entering a swap contract with a third party for the total return on S&P 500. So, for example, when you buy $100 worth of HXS ETF, the fund is going to keep your cash and enter into a contract with, a counterparty, which will say that if for the notional of $100, S&P 500 goes up 10%, the counterparty will pay HXX 10%, and if it goes down 5%, HXS will pay the counterparty 5%. So some of the benefits of investing in HXS is that one, there is no currency conversion from Canadian dollars to US dollars to buy the underlying stocks. There is no foreign withholding taxes. There is no taxable income. There is no dividends, which we will get into a little bit. The only way ETF makes money is through capital gains. On the other hand, if you invest in a ZSP, the Canadian dollars need to be converted in US dollars to buy the underlying stock. There is a foreign withholding tax on the dividend income, and there is taxable dividend income, which we will get into in a minute. One of the most important things that I look at while investing in an ETF or a mutual fund is the management fees. At ZSP has a management fees of around 9 basis points. HXS is not very far off with 11 basis points, so I'll give it a equal weighting on that one. But remember how I talked about HXS being investing in the swaps? So the trading fees on the swaps is around 30 basis points. So on a fully loaded basis, HXS has a higher management fees, but it gets benefit of no currency exchanges. and not holding the underlying stock and keeping the cash and earning some returns on that. When you are investing in an ETF, you will not be taxed on the unrealized gain. So for example, if you invested $100 on an ETF of S&P 500, over the 4 years S&P 500 ETF became 150. As long as you're not selling that ETF, you will never be taxed on that $50 of unrealized gain. But you will always be taxed on any dividends, interest, or capital gains that is realized in the ETF, because the ETF is obligated to distribute it. And as and when these are distributed, you are getting taxed. So if you take a comparison between ZSP and HXS, ZSP distributes on an average 1 to 2% of dividends annually. Whereas HXS, since it never holds the underlying stocks, does not get dividend, doesn't have any interest income. The only way HXS makes money is by capital gains. Though HXS is obligated to distribute the capital gains, but it has a significant amount of pooled losses from the past years, which, which helps the fund to offset the capital gains from the current year against this loss pool, and hence not liable to make any distributions. Also keep in mind, HXS doesn't hold any underlying stocks which give dividends. They only have swap contracts, and they have enormous amount of flexibility when to settle these swaps, thereby reducing any distribution. So now on to the big question, which one is better for you? And that very much depends on your personal situation. I'll give you an example of a couple of things that you have to look at in terms of choosing which of the two ETFs is better for you. And first one is the type of investment. If you are investing through a registered account like an RRSP, TFSA, or any other registered account, is more than likely that either you are not liable to pay taxes or your taxes are deferred. So it really doesn't matter whether you invest in ZSP or HXS, because both the situations your taxes are either deferred or you're not liable to pay taxes. HXS is a fund which you are beneficial in holding when you are investing directly from your personal savings account. And the second thing which is very important is the duration. If you're investing something for a short period of time, it's probably better. It really doesn't make a difference whether you invest in ZSP or HXS, because as in when you sell the fund, all the gains are realized and you have to pay taxes on it. The key here is that if you are investing for a long period of time and you are not dependent on the distributions from the ETF to manage your day-to-day expenses, then it is always better to invest in HXS, because by doing so you're going to be deferring your taxes over a long period of time and thereby creating that extra wealth um, in your personal account. And again, there can be few other factors, but that being said, you really have to look at the pros and cons that we discussed in this video, match it up with your personal situation. Send me a comment message in the comments. I will be more than happy to help you out if there is anything that you want to learn more. But again, it very much depends on your personal situations in terms of which of the two funds is better for you. That being said, goodbye for this video, and I'll catch you guys on the next one. Thanks.